Hello and welcome to episode 79
of Mo Money,
the investing economics show for millennials by a millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am the man that needs no introduction, but I'll do it anyways. I am the host, MC Mo. Now let's get to the money. This week we're going to be discussing a recent article that appeared on bankrate.com. The article says that 30% of millennials say that cash is the best place for them to put their money over the long term. It is understandable why our generation would believe this. It's been a decade since the financial crisis, but we have not forgotten about seeing the market take a 50% haircut, people losing all their savings, their jobs, and their homes. It was only in December that after months of mania, Bitcoin hit 19,000 before dropping 63% in 2 months. So with these two highly impressionable events on their mind, it's not crazy for them to say, I think I would prefer just to have the cash and put it in the bank and just not touch it. It'll always be there, so what's wrong with that?
Everything
Is wrong with that. Why? That brings us to this week's topic. Inflation. Ronald Reagan said inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. Milton Friedman said inflation is taxation without legislation, which is a lot less dramatic than what Reagan said. Now, both of them were right. Obviously, you can guess inflation is the expansion of something, but what exactly is inflating and why is it such a bad thing like these old white dead men say? Inflation, put simply, is the rising of the price of goods and the decreasing in the value of the currency. So when you see those old antique signs and say things like,
oh gee golly, Coca-Cola and a burger used to only cost 15 cents in the 60s. I wish it cost that much now.
So what happened? Did the Coca-Cola and burgers just get more expensive to manufacture? Did the world run out of high fructose corn syrup and beef? No, inflation happened. Dollars became worth less money and therefore it took more of them to purchase things, which is why the prices rose. So what causes inflation? The main reason inflation occurs is because of the inflation of the money supply. Money attributes its value from its scarcity. So the smaller the money supply, the more valuable it is when it's used in commerce. The more money that gets added to the money supply, the less and less value each piece of money has. The United States government has a monopoly on the money supply. You and I cannot create our own dollars. So when politicians decide to spend more money than they receive in taxes, they must pay for it by printing more dollars, which adds to the money supply. Inflation is a way for the government to raise funds to pay for things and not have to raise taxes, because nobody likes raising taxes, and it is terrible if you're trying to get reelected. So what effect does inflation have on normal citizens? Inflation is working every second to make you poorer. The Federal Reserve has a goal of keeping the rate of inflation as close to 2% as possible. So that means $100 today will be worth around $98 next year. Let's say you're lucky enough to have a bank account that pays you a yearly interest of 1% on your deposits. So if you have $100 in the bank, inflation for the year is 2%, your return on investment is negative 1%. Congrats, you put your money safely in the bank and you still lost money. Another example, let's say you're in the 15% tax bracket, making $36,000 a year. Due to a rise in inflation, your salary is raised to $38,000 to compensate. You're excited, you got a raise, great job! Except guess what? You just jumped from the 15% tax bracket up to the 25%. So instead of having $30,600 after tax, you'll have $28,500 after tax. Even with a raise, you now have less money and it can afford less goods and services because they cost more. Damn you, inflation! Bottom line, we've all seen the terrible things that can happen to the value of your money when you invest it in something. When you open your computer and see on the screen that you lost 20% or $1,000 in one day in a stock, and that feels like shit, and it makes sense that you'd want to sell the stock and put the cash in the bank because 0.5% return is better than 20% loss. $10,000 in the bank feels safer than 10 G's in the stock market. If someone robs the bank, no big deal. Your money is insured by the government. If you lose $10,000 in the market, there is no government agency to reimburse you for your loss. I know investing seems risky, but there has been no better producer of wealth ever invented. It is the key to a happy retirement. Do not let a few down years in the market discourage you from reaping the benefits of the historically proven and much more common years and years of positive returns. Inflation is practically invisible. You can't really see it. At the height of his power, Pablo Escobar was losing an estimated $2 billion a year due to rats eating his money that he stashed away. But that's what inflation is. It's little rats eating away at your money and eating away at your retirement savings. If you want to really see inflation, next time you go shopping or you buy a car, clothes, make a note of the price and continue keeping tabs of the price and see how much they go up year after year. And eventually you'll realize, man, I need to start seeing some real return on my money or I'll never retire. But here at Mo Money, we'll never say that we told you so. We'll be here to set you in the right direction. Thank you so much for watching another episode. You can find new and classic episodes right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook.
Mo Money, signing out.